closer to inching our way up to all-time highs, 68.20 or 69.20. That is the all-time high. And we will see if it's just another gap open, slow melt up all the way back to the highs again. That's it. Just pull back 4+%, right back to the highs. Like, that's all the market cares about. We'll see. Direction looks fine. Futures open. If it's positive gamma staying above 68.40, then directional 68.80, 6900. Those are achievable gamma levels today. With VIX at 17, 17.13, 0.1. We'll go 1.5. It's current VIX. About a 1.07 move. I'm going to take a screenshot of this from yesterday. Prices stayed inside the 50% ATR. Plus or minus on the day, we opened, closed within about 30 points. So 29.98 points. We probably tested the market maker move on the day, I would say, from this open, testing up around 38 points. That had to be very close to the market maker move on the day, and then fell back within it to close. So daily profit play, I didn't get fill at my dollar like I wanted. And then I canceled the trade late in the day because as we were creeping up to like 55, if we got filled at 68, 65, there's very little recourse other than being right. I mean, but if the market fills you at the end of the day and it pushes up another point or two or three, you're just taking on that unnecessary risk. So as we didn't get filled on this little climb through the morning, it didn't go much higher, but I just didn't want to take the unnecessary risk because the high that we calculated out by the VIX yesterday was in the 6,900 zone. Okay, so VIX box remained in check. Nothing got threatened. We closed within the 50% ATRs. So I'll update that here for the tracker. 11.10, 11.11. Closing price 68.46. Gap lower. Brief pause. Positive gamma flows to press the market maker move highs for the day. Close within 30 points of the open. All right, that is on my daily profit play HCR tracker tab. Okay, who's in the house this morning? Tom, good morning. Sandy, good morning. Paul, what's happening? John, what's happening? Greg and Larry. I had a great masterclass yesterday for waterfall income. Have a pending order from yesterday's class. Didn't want to settle for a mediocre trade. I like the setup a lot, actually. We're giving ourselves some forgiveness. We went out to February, which I said is maybe that started the weakness window, but we went back to take a peek at what happened in February 2025, which was at the end of the month, the market started to roll over. We had a 10% decline in the month of February that proceeded to go even lower through April's low. So I'm looking to see if perhaps with this recent pullback and this recent behavior, is this market going to deliver something like this? Are we going to see some additional volatility? Are we going to reclaim the high, stay in positive gamma, and this market just keeps going higher? I don't know. Right? So we will assess the stuff day by day. Right now, it's a good thing that the market is not further to the downside. We've broken, this little corrective trend line. You could do the same thing back here and say, there's a trend line break. Let me detach this. So if we just, drew a trend line, price breaks it, break, retest, and go. Break, kind of the same thing. Are we going to break and just run to 6,900 today? Are we going to, gap up a little bit, retest the trend line, go to the highs? just watching some price action closely, but taking our approach day to day. I'll recenter this at 68.46, 68.46. Okay. All right. So, positive gamma today above 68.40. We should be gapping up about 0.3%, which is going to put us up around 68.67. 6,900 certainly seems doable today. All-time highs at 69.20. Just a couple levels consider. So I'm curious where our deltas are at this morning once we have opening bell. VIX upper limit is at all-time high. Not sure what that means. VIX upper limit at all-time high. I have no idea what that means. Back testing, I use two of them. If you have a Tasty Trade account, oh, I see what you're saying. The VIX box. Okay. Yeah, the VIX box. Yeah, it is. Based on the previous day's close, we're going to gap higher. Look, and again, to be safer as far as like calling the top, if we gap up here, yes, the VIX box is right here. We shouldn't go past that. But in case the market's going to be possibly targeting all-time highs, let's take the gap plus the VIX and go just a tiny bit higher. So either going, wider on a credit spread if you want to get filled, or trying to put in, I personally like to put in the broken wing butterflies to give myself that profit trap. So if we gap up about 0.3%, which would be around 60, say 68, 66 roughly, and then measure out the VIX box around 1.07. So start here, go 1.07. I'd say the safe high today is like 69.35 to 69.40. That's going to be my calculation. 69.35 to 69.40. Potential top, that is gap plus VIX move at 17.18. Okay. And if we start from the close, go down 1.07, 1.08, this should put us down to the bottom of this VIX box around 67.75. Potential bottom, VIX at 17.18. If the VIX is increasing, then the bottom may have to go and shift a little bit lower. But the premium might also increase if we see a drop. But positive gamma above 68.40. Okay, let me bring up some real-time gamma. What's happening, Craig? John, to your question on back testing. So I pay for this one, Option Omega. I've used this for a few years. They keep refining it, making it better and better. If you want a free back tester, you can use. Actually, it's interesting. I had what was it? I guess beta testing permissions with Tasty Trade, and I submitted to them like some requests, and they ended up building out some things on the Tasty Trade look back program that look a little bit more like this. I've made more tweaks on this. There are a little bit more inputs if you run a test here, like if we did waterfall income, for example. So waterfall September 12th, we did some of these, kind of, let's see, that's a 30 delta. We did, yeah, here's a good one. So not a bad P&L, taking, I mean, whatever account size it is, but generating over $2 million in profits over a 10-year period. That's not bad. With a 96% win rate, that's not bad. So That's fun. That's actually one of my waterfall income strategies. I just beefed it up where we have a lot of positions, up to 104 positions, meaning like I'm going to take 2 years of these trades, which we don't. We literally take, if I stack them up, I'm going to take up to like maybe 20 positions at a time. So I tone this down a little bit and temper expectations, but we're hitting good profit targets. It's just if you've got the capital to place nothing but waterfall income trades, you can do very, very well. We had a good session yesterday. Here's a question. I just saw this on Twitter. If I don't use my $2,000 tariff rebate before the Supreme Court bans tariffs, do I lose it? If the tree falls down in the forest, nobody's around, you hear it. Just kidding. Yeah. So zero DT. Yep. Same thing. So you can test if I go into a back test here, you can test zero DTE, zero DTE. You can run whatever you want. If you go to Tasty Trade, you go to tastytrade.com, sign into their web platform. So let me log in here for a moment. And I believe it is under, I'll show you here. Should be under the Manage tab, either the Trading or the Manage tab. You can tone that down, Venkat. You can take the starting capital to 5K, 10K, 25K, whatever you want. And it's only one contract per trade, by the way. So when I test, I don't compound. I feel like that's a misrepresentation of just taking a trade. So, my point would be like, if I'm risking 1% on every trade and I did this, it's like, yeah, obviously if the account grows, you scale it, you compound it. That's great. I'm still not that trader. Like, once I had my accounts, over 100 grand, it's just every trade is less than 1%. And I just take thousands and thousands of trades. That to me is a lot easier to survive whatever the market throws at us and make pretty good profits routinely, each and every year. So let's go to manage. Let's go to trading. Here you go. So if you're in tastytrade.com's web platform, you go to trading, you can see here there's a little backtest icon in this vertical toolbar. Click on backtest. And you can run similar strategies. So you can add additional legs if you want to do, 4-leg trades, 2-leg trades, 3-leg trades. All data is available from 2013 to current. You can run this on. So one thing that is nice about Tasty Trade is they have a lot more tickers. So from, American Airlines, I mean, there's probably 200 tickers in here to trade, which is kind of nice, including the major ETFs. But it was pretty much all these different tickers by request. There's quite a few in here, which I think is pretty cool. And then you do have the S&P as well. So you have SPY, Qs, IWM, DIA, you have GLD, SLV. So yeah, there's a lot more symbols to choose from, which I'm pretty happy with. And you can pick either the delta, which is a very kind of mechanical way to do it, which is typically what I like to try to figure out if I'm going to, blanket a strategy. It's typically like delta related, whether it's, delta neutral or, into the money, out of the money, stuff like that. Then you can do price offsets. If you're like, look, at the open, I just want to trade, the at the money price, then you can price offset at 0, right? Price offset 0. That's going to be an at the money strike. If I want to do a delta, let's say we do like a 15 delta. So you can play around with that. You can take these things every day. You can pick specific days of the week. So point is, you can see, I think they did listen to my feedback because this testing ended up looking like the final product of their look back or their back testing program, because it wasn't like this before. Their beta version was very basic, and it was essentially, their go-to strategy. If you ever watch Tasty Live, it's all about delta, and that was pretty much what they gave you. So the cool thing is they made this a little bit more robust. So this is free. If you have a Tasty account, this is free. I don't know if you have like if you have an account that's not funded, you probably still have it. I think this is a free web platform add-on. Okay, I'm watching a business TV channel, SPX futures at 68.93. That's exactly the price. Why does it not make sense? It's not an exact price compared to S&P, right? It doesn't have to be 68.46. It's like futures runs 23 hours a day. So that's exactly what my spot price is. Okay. All right. Yeah, good stuff. Okay. I was actually playing around with a strategy yesterday. Um, I'll think about it. I'll think if I want to do something along these lines. It might involve a SPX trade during the day and a MES trade to hedge, but basically try to eliminate risk as quickly as possible, um, and minimize the downside. Especially in zero DT trading, minimizing downside or just managing downside is by far the most important thing. They could be a 5 minute delay. uh, yeah, a live TV channel is using 15-minute delayed price action. I mean, they might be. Is it critical that they're? I mean, look at if you ever listen to Bloomberg Radio, they're doing like their little every 5 or 10 minutes they have their little whatever the market review is, right? S&P up this, Nasdaq up this, bonds up this, blah, like every 5 or 10 minutes they have that little poster, that kind of automated message, or it's one guy reading it. I don't know. So anyway, but yeah, that's what real price is. I was looking at a strategy considering this. If we did, let's go SPX. Oops. If I did SPX 0 day, if the market opens and I do an at the money bull put spread, so I do an at the money bull put spread, you would want this trade for like 250 ish, like 240, 250, 260, if you're going to do an at the money. But the offset would be adding about $1 hedge to this. So you can pull in 250. So what I thought about was, I don't know, I'm going to kick this around. Maybe there's some validity to it. If I did a broken wing, and I don't know if this would fill, but if I did like a buy, sell, buy, do a skip strike or broken wing, see if this would offer at the open. And we'll know more about this in 9 minutes when the price is live. But if this was a broken wing butterfly that I could pull in of a 5 and 10, so this would be like a total risk of $5. Okay. So if I pulled in 250, I'm risking 10, take away 5 and the 250. It's like it's an equal risk. Okay. So my cost is 250, my risk is 250. If I could get the trade to fill. Now that's a broken wing butterfly. So that looks like this with a profit trap, right? So here's price. I have my credit. I have my bonus trap at the end of the day, and I have my risk. But the nice part is if we could take the trade for 250 and the risk at the end of the day would be 250, if I were to set a hedge that was $1 or less, obviously it's easier to get cheaper, but it's just lower probability. If I traded for $1 hedge, that does make my max risk on the day about $3.50. That'd be like dead wrong. But also, if price is going to fall, that dollar credit could also help, get into profit, save the downside, and then you could salvage a manageable risk here. So, basically, if we always had downside protection every single day, there's minimum adjustment here if I just did a broken wing versus a credit spread. The problem is I don't think I could get filled where I want on a broken wing butterfly. I think this would offer probably $1 to $1.50 if I did at the money. Okay. So anyway, let me do some more digging on that one. I'm going to mess around with it. So it's either a credit spread at the open, if I get the proper fill. So I'd want like 240, 250, 260 credit, and then looking at going out either in SPX for a dollar debit, and that way I'm still risking about 350 on the day, but I've got to be dead wrong. If price moves quickly to the downside, that dollar could quickly become 250. And this might be a partial loss, and so I could still end up making some net profit on the day. The other side of that trade would be to use MES for S&P micro futures, and to be a little bit more capital efficient, and you can let that thing run until like 5 p.m. versus cash settled at 4 p.m. just in case. So anyway, food for thought. Just another way to kind of think about zero DTE, tightening up risk, and still benefiting from positive drift. Right, the market's going to go up, collect 250. I spend $1 on a hedge. I can make, as long as I can keep over a dollar 25, dollar 50 on the day, I win, right? I can sacrifice an entire $1 hedge. I've got 250 a profit on a credit spread. And as long as I can manage 25 to 50 bucks or up to 150 bucks, those are pretty good wins day to day by having some downside protection. Okay. So I'll take a look at it. I might run some tests on it, see, how it does in the last 3 years, because that's when we had the zero DT stuff. It's not going to win a lot, I can tell you that, but the trades would be manageable. That's why I'm considering, a credit spread with fixed premium or a broken wing, as long as it could fill at like 2 to 250 for the day. I realize on a broken wing butterfly at the money or even slightly in the money, that profit trap would have to be, kicking in every now and then, as long as the market kind of maintains like, you know, I guess a break even day or higher would be good for a broken wing butterfly. I just don't know if the broker is going to give us the right fill, at the money. Would the put be 1-for-1 with the credit spread? Not sure what that question means, David. If you took a credit spread for 250, then your risk would be 1-to-1. Yeah, so you'd have 250 credit for a 250 risk. Oh yeah, I mean, you can take whatever contract size you want. Like if I was going to trade one contract, just always think about, like the core strategy, just think about one contract, right? You can scale this up to whatever you want. If you're like, you know what, I want to risk $1,000 a day. Cool. Take this trade and go 5 contracts. But for the purpose of the trade, it doesn't matter if I'm trading one contract or 100 contracts. Okay. When you start to struggle on getting fills is when you're, taking 100 to 500 to 1,000 contracts. Then yeah, you're going to not get, like, zero DT is going to be tougher at 100 plus contracts. Certainly 1,000 contracts, you'll wait, hours to get filled. So you can't trade zero DT, with that type of size. But in the, zeros and tens, even 50s, 60s, 70s, like you can typically get filled pretty easily. Yeah. So if I did one contract as a credit spread, so my sell put buy put is a one contract trade, I would just hedge with the one contract. Basically, it'd be, think about the math. If I pulled in 250 credit, I want my hedge to be about $100 or less. But the cheaper I go in the hedge, the lower probability it is to kick in and actually pay me. So a typical dollar, like a dollar hedge, is going to be maybe a single digit delta, like a 5 delta, which we can see price hit that. If markets fall, and it's few and far between, but when the markets fall, if this, dollar ask price jumps up to like $1.50, maybe $1, you make 100% on that zero DT hedge, like that offsets some of the risk, so the losses don't have to be terrible. So like I said, I'll play around with that. I'll see if there's something viable there. It's not going to be a trade that wins all the time. I can tell you that. It's just, is it worth it to manage the trade throughout the day? So if we pulled in 250 and we put in a hedge, the most we could make on the day would be about $150. But if our average winner was, break even or better, that's a good thing. If our average day was maybe pulling away $40 a winner, $50 a winner, that's great. Especially if it doesn't cost us a lot to the downside when we're wrong. Oh, that's too bad, Craig. 90 days. I mean, was that your second or third time it's happened? Usually Tasty doesn't just, yeah, I was gonna say, usually they give you like a free pass of like, hey, you've been warned. And then the second one might be like a 7-day, but it's 90 days. That seems rough. Thought 30, 90 days. Another reason for that crap to go away in 2026. That's so penalizing. You can do futures though, absolutely. Yep, you can take, ES. You can trade ES for sure. Similar trade is what we do every single day. So go to ES, look at your deltas. You can follow along with daily profit play. You can even trade ES on waterfall. You can trade, every strategy I take, you can trade on futures options as well. Ernesto says, I'd like to have a product that would save the trade, like the trade we had on October 10th. I mean, the trade we had, we didn't have a trade on October. We didn't try to call anything on October 10th, right? We made money in the morning because the market started to sell off late in the day, correct? So our trade on October 10th, this is, let's go to the 10th. here. So the market in the morning, that drop started to happen late in the day. So we were actually profitable in the morning with daily profit play. Our daily profit play did just fine. And then the market started to dump. So we were fine. In the morning, we made our money pretty quick. And then the market dropped. The trade I'm talking about, if that ever happened on October 10th, that dollar put would probably be trading for, oh boy, I don't even know. I'd imagine that dollar put would probably be trading for like $10. Not an exaggeration. So you could have like an 8 or 900% gain on a crazy day like that. And that's where the hedge comes into, it comes in very handy. So anyway, let me spend some more time on it. All right, here we go. Markets are open. We gapped higher. 6,900 still gamma to the upside. Let's take a look at our deltas. Okay, I'm going to look at these. So VIX is at 1716. We're gapping a little bit higher. I'm looking at selling either a bear call spread or broken wing up here near the highs. Let's look at the current price. Today is the 12th. My deltas need to shift a little bit. So 69.20 is recent all-time highs. That's a 16 delta. That seems a little high. 23.20. I mean, again, maybe this doesn't even fill. Plus or minus 23 on the day. That seems pretty low. 20 and 25. That's not offering a lot of premium. I mean, this is expected move. Look at this. Look at how this thing is shifted. Look at this pricing skew. On the call side, I can go 16 delta at 69.20. Look at how far away that is. Look at my put side. 10 delta. What the F, dude? Like, these are terrible. This would be like the standard call side. It's like this is completely flipped. When the VIX was up to 17, 18, 19, we were kind of testing the 20s a bunch. The put side, you can go way further below the expected move, and now it's like right at it. So I don't like that at all. Yeah, this is a pretty bad setup this morning. I'm gonna again, maybe the deltas need to switch a little bit. So here's a 12 delta at 69, 69.05. Okay, I'm gonna try this. I'm going low deltas here. There we go. This seems a little bit more appropriate. It looks like we just had to get some shifting. So I'm gonna go 9 delta call, 10 delta put, trade for 75 cents. I'll take it for $1. Pending order. And it looks like I got a new client coming in. Sweet. I think that's opened up with 300K. Going for $1 here. This is 10 delta. So 69.05. Let's go 6,900 here. 6,900. That is the gamma level. I'm going to try to stay above that. 12 delta put. 68.25 is positive. Okay, so we got the positive gamma pivot around 68.25. I'll take this for $1. All right, that trade's coming in pending for daily profit play. And I'm going to throw in some VIX box levels. Today's the 12th. Okay, pending trade for the day. Now let's take a look at our VIX box. So we know we have all-time highs at 69.20. That's my VIX box. 17.25. VIX is going up a little bit. I'm going to take that gap in consideration. We opened here. Let's measure about that 1.07, 1.08. Now we're talking, 35 and 40. Okay, I'm going to put a butterfly up there. That's a 69. 69. I mean, this is a low probability of fill, but I'm going to go either a 40, 50 for $1, And this is way more risk. But again, I'd put this out there maybe for a tiny bit more risk. So if I could collect at least $1 on this one, going out to like what I think the top would be, or I put in a broke wing butterfly. Broke wing butterfly is way less risk with the profit trap. A credit spread would just have a little bit more opportunity to get filled if price drifts higher. So I can either go 40 by 50, 10 wide for $1, and I'm still risking $900 on that trade, or I set it up with the 35, 40, and skip strike, and I set this up for like 50 cents or $1 credit. I'm going to go dollar credit, set it at the highs. That's going to hang out. Okay, plus or minus in the day is only 23, 24 points. It's Wednesday. We don't have any major news. I think the House is supposed to vote today at 4 p.m. We might have a government reopening tomorrow. I'm very curious if CPI, PPI print on Thursday, Friday for the news. I do think that the market didn't get a government reopening. It was already kind of hyped up and the market gapped higher, obviously Sunday to Monday. If the market doesn't see the government reopen this week, then we might actually have some volatility coming where it's just more of the same. Like this is definitely dragging on GDP. The optics look pretty darn bad. This is the longest U.S. shutdown in history. So we'll find out. But see where price goes. I respect the flows. I know it's Wednesday. But as the market maker move is only like 20 to 23 points, I'm just not going to sell crazy aggressively, right? We're already talking about a 23-point move that hits the 6,900 gamma. I mean, this could be somewhat directional, right? So I'll set that up with so if I went 63, 69.35, 69.40, 69.50, that also lets me trade this as a $1 wide spread. I'm going to take this trade for $1 and then go 45 to 55 for $1. See if I can grab some extra premium on the day. I think those are pretty high probability tops to trade. But just to be safe, I don't think the government can reopen today. It's going to have to be a vote this afternoon, probably after the close, and then we'll deal with futures and maybe have some data tomorrow. So I'm going to cancel those bear call spreads. Those are a little wide. We've seen a lot. We've seen a lot of trades this year that have given us more risk to the upside. Even though my job is let's calculate the VIX. VIX should be going lower if the markets are going higher. That's typically a correlation. So let's stick with a broke wing at the top and then our daily profit play, which again may not fill. But if we have some direction, if we get pushed up to like 68.80, 68.85, and it happens fairly early this morning, this trade should fill for $1. That would shift our like 9-10 delta call side to probably a 15 to 20 delta. And that should be enough to get us some premium to get filled. Okay. All right. So pending order. That's what's happening. 50% ATR. Couple good levels to note for the day. If price comes to 68.40, okay, that's our positive and negative gamma point. If we come up to the 50% ATR, that is 68.85 to 68.90. I'm curious what that looks like for if we went 95 and maybe put this on as a double up trade, maybe 15. So couple bucks risk. Can tighten it up. Risking $1.15. If we get inside that profit window. That's an 88 to 89. There's 50%. Our gamma level is 69. No, I'm still in it. It's pending. So I might throw, let's go 69, 69. Let's go here. So that's 20, 20, I'm looking at a bit of a modified um, iron fly. Trying to cast a net at the top. It's going to risk about 200 some dollars. We'll hang out. I mean, we opened up at 68. We have a plus or minus 23 on the day. Upside would be around, 80, probably 88 to 90. We could get to 69 and obviously fall back in. But let me see where that positive negative gamma. I think it's 68.40 still. 68.40. So two levels for maybe catching some price action today would be between the 68.85 to 6900 zone. If I could look at a double up trade there, and then maybe back to the gap fill or the positive negative gamma. Can I get this trade for 1710? Are we just gonna have like a big nothing burger day? I'm gonna hold off on this right now. Just want to see a price will come to us. Okay, you did a 6900 call side, 6810 put side, 10 wide, $1.30. Got it. Okay. It's gonna hang out a little bit. If we go, let me zoom in here. If we drop, so plus minus 23 on the day, if we go down about 20 to 30 points, I would look for the market to, maybe gap fill, find that positive negative gamma pivot point around 68.40 and try to find that as intraday support. I mean, I would say it's important that the market doesn't really break any structure here today. So we don't really want to see the bears directionally come all the way back down. If it just stays here, drops and fills the gap, but we bounce back up, I do think it might be difficult to get to 69 today, 6,900. But here's what I'm seeing. What is an attractive spot is the combination of that's one of my highest gamma levels at 6,900 and the 50% ATR is around 68.90. So if this is a little bit cheaper, maybe even a gap fill, can we make our way back to the highs of the day? That could be a butterfly spread on double ups. We come back to fill the gap at all, either retesting the high or getting to that 50% ATR. Those would be, two pretty good trades to see if the market, holds this positive gamma. I did put it in the pending order. Here's the broken wing if you want it. Broken wing, I started at 35. So putting it pretty much at my calculated high. VIX is at 17.3. So keep an eye on that one. So this will be a bonus trade. Today is the 12th. SPX. So I'm doing a buy at 69.35. One contract, selling the 69.40. And then buying the 69.50 for $1 credit. Okay, let me take a look at one thing. I talked about that little 250 wide spread. So if I did an at the money spread, that offers 210. You go, one strike in the money. We're trading at 68.65. You go to a 70 by 65. There's your 250. So if I went 250 spread and added in like a 95 cent put. I mean, that's cheap. That's a 5 delta. It's there if you need it. But if price stays above 68.70 today, and again, it's managing profit. I can sacrifice that dollar. This would be filled for 250. So as long as this thing is getting us 25 to 50 bucks profit, we've got a hedge in there. It's not a bad trade. But your hedge is only really there like in dire circumstances where the market look at the point differential. We have to drop. The market's expecting a 23-point move today. Our hedge is 80 points away. We're trading at 68.62, and our hedge would be all the way down here to 67.80. Okay. That's 80 points lower. That is a 3 to 4 times expected move. Unlikely. Okay. But price wise, it's there if you need it. I'm curious if I get a 1 day. I'm going to play around with this between a 0 and 1 day. If I did a Okay, if I wanted 250 on this, and then you have to go out $1, you're going to go way further out here as well. This is way further out. Good Lord. Now we're going 170, 170 points lower on an expected move 1 day out of 40. It's like the probability of this thing actually filling is very cheap. I think futures is just more cost effective to hedge. So anyway, we'll see. All right. So a couple of trades for today. Pending order for the daily profit play. Let's see if we can get a little bit more direction to give our fills on those lower deltas. And then the other option I'm looking at is for double up. If we are going to hang out here, let me change the color. If we're going to hang out here with a little bit of consolidation or maybe a retest of the gap and we bounce back up, can we come after the 50% ATR? So either retesting the high of the day, getting to that 50% ATR, that might be worth putting a profit trap on. And then the other trade would be hitting the pivot point around 68.40. So let me see if either of those are cheap enough to trade. Maybe a 10 wide is kind of in the cards. 10 wide shouldn't be terribly expensive. Ideally, I like to go 15, 20 wide because it's just a bigger profit opportunity. So let's see here. Oh man, my pivot is 68.25, and then my pivot here is 68.40. It's a big difference. Let me see what the 68.40 looks like. So 68.40, 10 wide. That cost me very little. I mean, 925. See if we can get filled for like a 75-cent risk. If this gets filled, this would be a trade for double up. Maybe I'm curious what it goes if I went a little bit wider. So 40. See if I can go like 35 by 50. That's a $1.50 risk. 40 is where I want it. 10 wide. Now it's trading for that's a big difference. I'm going to try 9.15 again. Oh boy. Now we're dropping. Okay, let's hold off on that. I think because this is kind of crazy. We're seeing some of the plus or minus market maker moves like we saw when the VIX was 14. Like this is pretty low. I mean, I don't know. I feel a lot better when this, I don't know. When the market's at like 30, 35, 40 for the plus or minus, I just feel like it's a little bit easier to stay out of the money and get the fills that we want. So something tells me we might be getting a bigger move than 25 today. At least intraday, we might have, 30, 40, 50 points in one direction. The market maker might still do a job, but I don't know. I'm just a little skeptical of like that seems pretty low for the VIX still hanging out around 17. Okay. Just watching. So between 40 and 20, again, for the day, I mean, are we going to drop 40 points in the day? I'm looking at some real-time gamma. This one seems pretty cheap and gettable. Let's find out. 20. Whoops. If we went 20, then threw a 15 or 20 wide on this. So I'm risking $2. But that's also asking price to drop another 30 points, which it might not, given the plus minus on the day. So I know I'm just going to hang tough. You already seeing? Are you seeing risk already, Larry? So my daily profit play is trading for about 70 cents. It's still not filled yet. Down 10 cents. Okay. I mean, zero DT is just really sensitive. When we get like and usually it's just an aggressive move. When it's not so much the points. It's like there's such an aggressive change in delta because of gamma. Gamma is like the accelerator when you see the deltas are changing. Gamma's like that gas pedal that fires it up and makes delta shift all the more quickly. This is why I say that zero DT trading is like 10 times the gamma risk. That's why it's important that you understand like defining risk in a zero day environment is so important. Yes, it can work for you, it can work against you. If you have a long put or a long call, you can have crazy returns. But the problem is you're paying a lot of money for those premiums and you're not guaranteed direction as we see every single day. Most of the time, the market's not going to move a ton. Most of the time, the market's going to stay within the market maker move, which is how we, slay it for daily profit play. Right. But yeah, if you're still 40 points clear, like I think you're okay. I mean, it's Wednesday. Let the market makers do their thing. Let the market do its thing. So this was just kind of coming back to maybe gap fill. We're still staying above positive gamma. So we'll see if this is a pullback to kind of retest the gaps and see if we head back up. Maybe that 85 or 90 is a little bit cheaper now. Let's find out. 80. I'm going to go 85, 15 wide and see if that's cheap. 220. That's not a lot of risk. If I go 10 wide, it's going to be even cheaper. So about $100 risk if we can get back up to 70 highs, or I'm going after the 50% ATR. But if we're not getting a huge differential here between call and puts, this might just be like a noisy day. Okay. So I'm just going to hang out, let this market kind of flow for the morning. No reason to force trades. VIX is up, however. VIX has jumped up to 17.6. So that would change my expectations on the downside, right? So we had a potential 67, 75, and 70 bottom. Do the VIX based on the close. We're up to a 17.6 now. So potentially a 1.1% move versus 1.07. So 1.1. So I'd say now like the 67, 70 to 65. And that's based on a 17.6 VIX. So the VIX continues to go up, then yeah, this market could fall a little bit lower. We'll see. It shouldn't go past this VIX box unless we see the VIX run to like 18 and a half, then yeah, obviously don't try to call the bottom. But more than likely, if it's a plus minus 25 today, I'm curious how the market settles. There's no news. Even tomorrow, like CPI and PPI are tentative on Thursday, Friday. Government reopening stuff is maybe some drama today at 4 p.m. Nice. That's awesome, Larry. Yeah, sounds good. Okay. So let me try like a 6,900. Let me see how high I can go here. If I went 6,900, that is not at my call side. So if I went 69, 69, 80, and 20. I mean, could we get to 80, 85 today? My 50% ATR is 68.88. Plus or minus open on the day was 67. It should be doable. It's just right. It's like calling a direction on the day is somewhat challenging because here's where we are. If I'm looking at a profit trap, it'd be between like 80 and 20. So profit trap would be way up here, which is plenty. Okay. And then the other profit trap would be somewhere between like, 40 and 6,800. That leaves me vulnerable in the middle. So if we have one of those days where like literally nothing happens, then I lose and I lose. And that's okay because it's small risk, but it would also be very annoying to see that price literally goes nowhere today. You know, so I'm not forcing a trade right now. That's what I'm saying. This is only a 6 point differential on call and put sentiment. It's going to hang out for right now. Okay. Speaking of dividends, let's actually take a look. Let's run a scanner here. Let's go simply Wall Street. Let's look at a screener. Let's do financially healthy. Let's focus on like big fat dividends. These are probably going to be banks, to be honest. Well, let me just tone this down a little bit. So something in here, something in here, like well positioned. 23 results. Let's go filter this. I'm going to go US. I'm going to go US companies only for some liquidity. A lot of them I figured would be banks. Some of the best snowflake analysis are all banks. Yep. Qualcomm, interesting. First Community, that's a bank. Simmons First National, Pinnacle Financial, Valley National. These are all regionals. Fifth Third, Old National, Huntington. All right, let's do. I think I've got a screener in here. Just going to Tasty, go to dividends, go to dividend aristocrats or champions. Got some pretty sweet plays in here. So dividend yield. This is dividend aristocrats. These are some pretty high dividends. Take a screenshot. Take a look at the technicals. Not awful. Let me go between aristocrats and champions. There we go. UHT MO is one of my favorites. Some of these overlap. Target, 5% dividend on Target, huh? Interesting. I took profit on the ratio spread on Target. That's not bad. See if their dividend is stable. Pays a high and reliable dividend of 5%. That's crazy. Man, some price appreciation on Target would be pretty solid. Oversold conditions. It's down 70%. That's insane. I already took profit on this one. I might look out a little bit farther. Let's see how low we can go. I mean, I don't really want to own the shares, but if it was cheap enough, and unless Target's going to turn into like a Kohl's, which I don't think that it will, but that'd be insane actually. That would be like watching a Walmart turn into a bankrupt company. Yeah, I know that's a wheel strategy. Ratio spreads are typically how I start that. It's kind of a fancier wheel. So I've already taken 4 or 5 trades on Target this year, just staying out of the way. Ratio spreads. When we were down into this level, ratio spread paid. Down at this level again, ratio spread paid. My levels were like the 80 by 75. So probably can do the same thing again. Let's take a look at Target. Let me just take a screenshot here. So UHT, I'm going to just take a screenshot of this. Some of these top dividend plays. So MO has always been one of my favorites. Is it PMI? Is that Philip Morris? What they changed their ticker to? Or is it what's Philip Morris? PM. 156. MO I like a lot. We're at 58 bucks, and also BTI, which is kind of the equivalent, but in the UK. I've had lots of puts on this one, taking some profits. So dividends of 5%. MO is a little bit higher, near 7%, 7 point and change. But anyway. All right. Target, 68% off all-time highs. Discount cash flow. I mean, that's an impressive dividend for now. I mean, obviously they can cut into that, but let me see if I can go a little bit further out of the money, set up a little ratio spread. So they have earnings on the 19th. Could imagine that their earnings are going to be great, but maybe enough to stop the bleeding. You know, maybe have they hired a new CEO or anything? Cutting prices in about 3,000 food, drink, essential items to boost competitiveness, attract budget-conscious shoppers. Yeah. Okay. So, I mean, maybe a bit of a kitchen sink Hail Mary into the end of the year. If we stay out of the way, maybe an 80 by 75 works out. Let's just go to the end of the year. Maybe January is not a bad trade. 80 by 75. Yeah, I took this trade earlier for, a couple of bucks. Let me see what I did on target before. So TGT took 7 positions on target. $1.74 credit paid. Let's see here. Debit spreads for over a couple bucks profit. Yeah. So it's not offering a ton of premium, which is kind of unfortunate. Classic. Everyone see David's. That's just host and panelist David instead of everyone, but I'll read that. Target to incorporate AI-powered shopping assistant into app. Incorporating new AI-powered technology in its app to help visitors in its stores. All you have to do is mention AI, just hoping that you're getting a bump. Juice the market. I mean, the chance that I could take would be do like a 90 by 85. It's like the guess is it's down enough it can't necessarily get beat up any further. I mean, obviously it can, but if I did a 90 by 85, get this for $1.47, the ownership price would be price has to drop below 85. I'd get assigned, and my break-even price would be 85 is the assignment minus a $5 profit trap and $1.44. I'd own the shares at 78.56. 78.56 right now is not a bad spot. But is it worth the assignment for 140 bucks of income? I mean, if price is up, then there's no assignment. You grab the quick income, and this trade's done in 60 days. I'd like to go down. That's only worth 65 cents. A little bit less exciting. If I do, it's probably not going to be a good trade here. If I did a 90, 85, 75. Yeah. If this was for like $1, I might take the trade. So anyway, I think I mean, with an Ivy rank of 64, I am surprised it's not paying better. However, if I really, really like this story of Target improving, and I think, and this is the sketchy part is, do I think we could stay somewhat resilient in this market, somewhat bullish in this market through 2026? I mean, I could probably go down to like a $60 to $50 price tag, go out a lot farther in time. Let's look at like a summer, May, June, kind of getting this like this. If we have a pre-summer push, if the market's gonna have some type of like resiliency through like if we have a weakness window in February, March, April, come back into like a May, June rally. Maybe there's a value rotation. I don't know. Let's look at June. Now a 75 by 70 pays a little bit more. This to me isn't a bad trade. Ratio spread, pull in $2. If I own the shares, price would have to be down to like $65. I don't shares at 63 bucks. So 70 is the assignment price, minus 5 on a profit trap, minus $2. I don't shares at 63 bucks. That's another 26% lower. And I'm not saying it can't get there, but if we're down to $63, we are talking target is a 75, 76% discount. I mean, if this retailer is not going to go broke, then I think we kind of stall here and maybe bottom out. Let's see. So I don't mind this trade. I'm going to see if I can get 205, maybe take it down to $2. This be a project options edge if I can take this fill. Let's try $2. So 205, not filling. I'll try 203 where the mid price was. I'm willing to accept like $1.95. Let's try $2. Not filling. Come on. $1.95. I'm not chasing this thing too much lower. All right, $1.90 credit. Come on. Got filled at $1.90. Okay. Ratio spread. So that was like $1.74 taken for 13 cents. So that was $1.61. Just got $1.90 to take this out for a couple other accounts. This would be for Project Options Edge. Getting filled for $1.90. Okay, $1.89 got filled. Okay, couple trades in. Now, good. It's good fill. So $1.90, $1.89 got filled. This is officially going out for Project Options Edge. So Project Options Edge, new trade. That is the June 18th. Buying the 75 put, selling the 70 put, $1.90 credit. I was filled at $1.89 and $1.90 credit for multiple accounts. Probability of profit on this trade is around 82%. Assignment risk would be we'd own the shares, if assigned. So two ways to manage this trade. I don't mind taking assignment for 100 shares if target is less than 70 at expiration. Break-even price would be 70. 70 minus 5 minus $1.90, 63.10. 63.10. And I'll add covered calls to repair for net profit. If you don't want the shares, manage the naked put for a 300% stop loss. So that would have been like a 310 credit. Consider a 930 debit close. So you lose like $600. So it's manageable, but that's a pretty good looking trade. All right. So that is now in my tracker. 618 expiration. Buy the 75 put. Sell the 70 put. Okay. And then Project Options Edge, getting that trade as well. It's been posted in Telegram for Project Options Edge. Target. Okay, trades in. Cool. Okay. So trade looks all right to me. It looks like I may have had an assignment today. I think on Chipotle, CMG, trading at $30. And then I got another chunk of shares assigned. So I had like a 42.50, a 40, 37.50. Think of getting assigned some of those shares, which means I'm going to add another covered call right in here. So Chipotle, um, only got a, okay. So I didn't get assigned there. Did not get assigned there. Did not get assigned there. Did not get assigned. Did get assigned. So 42.50 and a 40. All right. So now this is a March 20th. I'm going to add another call here. This is CMG. No assignment. No assignment only on the 100 shares. No assignment. Only one assignment. I mean, I would guess that these other accounts are probably going to get assigned at the 40 strike. 100 shares. 100 shares. Okay. So this account, I'm going to add another covered call. So I added a March. I'll go June. $1.70. Nice. So that's staggered covered calls for my 200 shares. Lower my cost basis. So that covered call was 77 cents. And it's 618. $1.71. Okay. So that gives me 38.31 minus see $240.20. So break even 37.11. Okay, stuff. Beverly, what's the question here? Rick says CMG2 I've been using. Call broke wing butterfly price to hedge works so far. Yeah, we'll see. I mean, it's another one that fundamentally, I mean, it's the demographics. I mean, they've been just pretty open about losing customers and not losing, but just like, look, their burritos went from 7, $8 to $15. So, you know, your 20 to 30-year-old demographic is shopping at the grocery store and cooking from home, and they're not eating out at Chipotle every day. So that's been a big hit. I mean, it's still, it was like a long time, like one of the biggest like restaurant growth stories ever. Like Domino's Pizza, Chipotle were like freakishly good stocks. Now it's reverted back to a 25 times earnings. You know, it's fairly priced, which I think is interesting. After that crazy split they had, they were like over $1,000 at one point. I think it was like you know, I don't know what the split was. What was the split? And that price action's kind of crazy. So I'd love to see a gap fill on Chipotle. If we get a gap fill back in like 35 to 40, um, but let's see where that split was. I know that split was pretty severe. It's going to go back that far. Oh, there it is. There is your 50 to 1 split back in 2024, summer 2024. What I think is interesting is when they split, that was the top. So we'll see. Hopefully, if anything, if it would be a correction, so low to high, change the color. If this was a low, high, and this is just kind of an orderly correction to finish out this move, and then we're looking to trough this thing out, you know, at least gap fill, maybe spend some time consolidating, round out, and then longer term, Chipotle gets its crap together. And the food's still good. But I just think they haven't been super rosy with their guidance. They're not like, hey, use AI to buy your burrito. Boom, Chipotle goes up to $50. You know, whatever. They're talking about people are struggling. So they're on the bottom end of the K-shape. K-shape economy. Chipotle is acknowledging like these are some of their clients and customers, and people aren't coming as much. All right, what else we got going? Beverly says, wanted to discuss your service with you. What's the best email to reach you? Beverly, I'll send this to the chat for everybody. Chris Pulver Pub. ChrisPulverPub@gmail.com. Best email to reach me. Don, what do you have there? Is that a broken wing for $1? Okay. Gotcha. For sure. Okay, let's do this. So we had a waterfall income 2-day masterclass this week, Monday, Tuesday. The trade that I took yesterday in class. Here's what's going to happen. Deanna's going to tee up a little waterfall income session. The class that I recorded yesterday, I would encourage you to watch. If you watch this week's recordings, Monday and Tuesday, it was Waterfall Strategy 1, Waterfall Strategy 2. The trade we posted yesterday, I really liked the trade. We also took a trade live on Monday. So the trade on Monday is already positive and profitable. We have a couple of pending orders. The one I took yesterday, I especially liked. It was going out to February. I would let that trade marinate. I think that trade could get filled. So if you check out the recording from yesterday in the masterclass, that trade is pretty solid. We're looking at a $1,000 profit trap, a 75-cent winner, and hopefully it's enough room for error. We have I think we gave ourselves like a 15 to 16% buffer from current price. Okay. Thinkorswim indicator, daily profit flow, you have it. If you're a daily profit flow member, you have it. It's inside your classroom. Go to Daily Profit Play. Check out your download Daily Profit Play indicator. There is it's a grid share link that I put in for Thinkorswim, so you can just copy and paste that into your Thinkorswim platform.